Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 18, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got bunches of stuff. From an S&P perspective, daily chart perspective, she's again riding the trend line. You can see it very clear from a weekly chart perspective. Riding the trend line. 2 weeks ago, put in a sign and or signal of a trend change. Have yet to make a new high from 2 weeks ago. In fact, that high has yet to be eclipsed. They did a retracement of sorts, and they're hanging around the trend line still. Eating time off the clock around the trend line is not bearish, but yet can be a bullish development. They are a little bit far from home base from a weekly chart perspective, so coming back down to meet or at least go in the vicinity of home base is customary in terms of how the market works. That's the 30,000 foot view. Now, before we get to the nitty gritty of what's coming up on the docket, I'm chomping at the bit to discuss Tesla. We're going to discuss it from two angles, a swing trade angle and a day trade angle. If you remember a few weeks ago, I had a number in Tesla. I said they're going to try and put in a higher low. We drew a line here, drew a line here, and said they're going to try and put in a higher low. The ideal spot for me was 164.65, give or take. The Lazy Swing Trader Automagical Algo System put out a swing trade at that number last week. It was on Thursday. This is what it looks like today from an hourly chart perspective. Buy price last Thursday, gap higher open today, and they ate time off the clock around the highs made this morning, which is not bearish but bullish. First target in Tesla coming. It's already up about 5.6% on the current swing trade list. Nobody wanted it. They were bearish. The analysts were downgrading it. While the analysts were downgrading it in the live room, I was calling them morons and I was licking my chops. You'll hear all kinds of reasons today on TV why Tesla was up. They're going to deliver more cars. They're going to deliver more cars at higher prices in Europe, this, that, and the other thing. It's all nonsense. They went to the number and they reversed. That's how it works. If you have the numbers, you can make the trades. Speaking of which, this is exactly what the intraday chart in the live trading room looked like Tesla today. Tesla was coming down first thing in the morning. I told traders in the live room 166 is your place. That's the bounce place. It's a fake out operation. It's not a gap and crap. That's not the way I felt about it. They made a spike higher right at the open. Here's the profit taking. Here's the rug pull event from the chasers. And 166 was the bounce place. We had traders from a swing trade perspective, traders from a day trade perspective make oodles of money in Tesla today. The money is made on the turns. Lazy Swing Trader Automagical Algo System. Back to the S&P. What do we have on the board this week? We got tons of stuff coming up. All right, here's one thing. And by the way, before we even get into that, Tesla happened to be the top performing of the Magnificent Seven today. We stepped in on the long side when nobody wanted it. Last Thursday, big gap higher today. The rest is history. How you doing? You like apples? How do you like dem apples? Now, back to the S&P. What do we have on the board this week? We have Kabuki Theater. What's that? The FOMC announcement this week. The Federal Open Market Committee will meet Tuesday, culminating Wednesday. The Fed will come out. Jerry will have a presser. They'll come out with their interest rate decision. Are they going to raise interest rates, lower interest rates, keep them the same? What's their projection? What's Jerry going to say in his presser after the meeting? All that stuff is on the board this week. But wait. There's more. The spring equinox / tinfoil hat event occurs the night of March 19th. So we'll call it March 19th into the 20th. The 20th is Wednesday. That is the culmination of the FOMC / Kabuki Theater Day. That's interesting. A lot of traders in comments under the video, they'll send me emails, ask in the live room, why do you think the market is going to move or reverse or change direction around the spring equinox or around another tinfoil hat event? And my answer to them is, it's not what I think. It's what's evidence on the charts from history. Not every time, but if you go to these events, these tinfoil hat events that we identify in the past and say, well, what did the market do around those events? It's not going to reverse for a big move every single time, but if you take a big bucket full of these events over many, many years, you'll notice that a large majority of the time, the market moves. Markets have a tendency to trade up or down into these events and shift direction. I'm not making it up. It's evidence on the charts. Do the homework. More importantly, when you go out to April, just a few weeks away, we have a more important tinfoil hat event. It's going to play into the whole schematic. Stay tuned. Anybody think this trend line is still important? Look at the hourly chart. They hit it into the end of the day and bounced off of it, did not close below it. Doesn't mean they will or won't open below it tomorrow. There's a gap down below, all that stuff. But just the sheer fact that the market knows about that trend line, then you and I should know about that trend line. Even more magnified on a 5-minute chart. Came into it, bounced right off of it. The market, Mrs. Market, knows about the trend line. What about inside the numbers today? Anybody make money today in the live room? Inside the numbers? Let's hear it under the video. Let's hear the comments. Post whether or not you're making money in the live room, inside the numbers. Is it working for you? Give me some feedback. Let other traders know your feedback. Post a comment. Be a citizen of the markets. So right out of the gate, we have some stuff, a bull case, but then they went higher, so we adjusted the bull case later. We had a bear side, flip side situation, but let's go up as the market melted up during the pre-market. Let's just fast forward to when we have the material information. Pre-market goose operation continues. Here's the latest. Above 513.20, and this is a number you saw before. This was resistance while they were below, but once they got above, it's still an important number, so therefore it becomes support. So above 513.20 and the doors open for the next leg higher. Where's that next leg higher? Right around 515. We're going to narrow that down as time goes on a little bit later. These are the 8:21 a.m. pre-market notes. Let's move on a little bit. So what we're saying here, and by the way, let's check out 513.20 from before, just for kicks. Here's a 5-minute chart. Right of the vertical that's not there is today's activity. Now it's there. And what you see here is this first candle of the day, 5-minute. Market wasn't actually down there. It's a shenanigans tail candle. We talk about those all the time. Look what happened here. Low in this candle in the afternoon before they cracked it into the end of the day was 513.21. Think the market knows about that 513 number? They bounced it up about $1, a little less than $1, about 8 or 9 S&P handles, by the way. So here's the 9 o'clock scoop. Let's say the morning chasers hop on board and push price up higher. Where's the spot? Well, they will get a pie in the face courtesy of a rug pull event. Well, it starts at 515.10. Any higher? What happens if they go higher? The next number is 516.10. Same 5-minute chart. They spiked 515.10, came all the way back down to the trend line. Funny how that works. They got into that zone, not even halfway home, but into that zone. That was a resistance zone identified long before the market even opened for business. Where are you getting your numbers is the question I have. If you're not a participant inside the numbers, you're not in the live room, you're watching these videos, you're participating in the market during the trading day, where are you getting your numbers? Where are you getting your information? And here's the second question. How does it match up with my information? This was a zone of overhead resistance. We had the flip side situation, didn't need that. I just want to highlight a few important things. You can pause the video, go back to the chart, double check the work. Let's see what else we have as the day continues on, the morning session continues on. 5:15, 10 became our pivot. Above is the bull case. Below is the bear case. Again, pause them, read them, go back to the chart to double check the work. It's all in here, all the numbers, what happens if, here's the support, here's the resistance, yada, yada. What about stocks on the move? We had 3 possibilities today. 4, FOUR was off the table, didn't hit its entry objective. We're going to take a look at Coin and Boeing. First, we'll take a look at Boeing getting a buzz cut at the open. We had a zone 179.69 down about $1.70 to 178. They came into the second number after slicing through the first, bounced right back above the second, providing the base hit plus and then some, meaning stand up double. Your average is 178.80, give or take. They got up to a high of 181. That's a nice trade from a day trade perspective. How you doing? Coin today, there's your zone, 234.30 down to 230.40. Bounce back in the other direction. Again, apples, you gotta love them apples. It pays to know your numbers. Nice rocket ride back above 242 from 230. That's $12 in the same day in coin. How you doing? Smells like Tesla, doesn't it? We had in the live room what's called a little bit of a bonanza today. We had some shorts, we had some longs in the spider, we had some coins, we had some Teslers, we had plenty of Teslers, we had a Roblox. We had a group trade in Roblox down at 36.59 for the bounce and base hit. Telling you, it was a Monday bonanza in the live room. It was fantastic. We had a 201.50 from a day trade perspective in the IWM today, early in the day. 201.50 held. I told traders in the live room, it's not easy. It's a higher risk spot, but traders bought it up, 201.50, wrote it up for however much they wanted. Another part of the trading bonanza today. It pays to know your numbers. Speaking of Camp IWM, my favorite market leading indicator, what do we have? We have a new high. This is big picture, right? So we had a former high from December. We had a new high. We have a pullback. We have given up the 20-period moving average, and we have a really important spot. We talked about it last week at 199.15. Close the week below 199.15, and that's a different story. That's no longer a bull case. However, run a test of it, come up short of it, never touch it, close consistently above 199.15. That is the bull case for another run higher. 199.15 is important in Camp IWM. Write it down, put it on a sticky note above or on the side of your computer. Relative weakness today against the S&P 500. What does that mean? Well, my favorite market leading indicator was weak against the broader market. Broader market, SPY, was up about 0.6% today, $3 at the end of the day. IWM was down $1.16, a little over 0.5%. Relative weakness. You got to say, hey, what's going on under the covers? It's a puzzle piece. It's on the tables. We're the umpire calling balls and strikes, and it could be a one-day divergence. But what we can tell you about these type of divergences is they will resolve themselves one way or the other. Either the spiders, S&P, is coming down to be in concert with Camp IWM, or Camp IWM will do a flip around situation and run in the northern direction to catch up to the S&P 500. One of those two things is true. We'll find out which one. What about the folks down at the transportation department coming into this convergence of moving averages? It's the 100 period and the 200 period moving average down about 0.5% today. Again, relative weakness against the SPY. We raise our eyebrows, both of them, because our favorite two market leading indicators were not following the S&P. They were actually diverging in the negative direction against the S&P. Those are puzzle pieces. They're on the table. The transports are my second favorite market leading indicator, but a number one canary in the coal mine. Closed last week below the 20-period moving average, remaining below it this week as well. So far. Question is, are they going to bounce off these moving averages? And if they cut through them, where are they going? This blue line, 15,265, is that place where they would be going on a flush under the 1 and 200 period moving averages. What about the Q people? What's going on over there? Well, there's nothing wrong with this market. They were up 3.5 bucks today, 0.8%. They're riding the 20-day moving average. Not a big deal because we look at the weekly chart and we notice, hey, wait a minute. They were a little extended from home base, the 20-period moving average, or the red sloping trend line, and therefore it's not out of the ordinary to go sideways, chop around for a while, let home base creep up to price, let price creep down a little bit toward home base, work off some of the quote-unquote overbought that can't be measured. Anything wrong with the financials? Nope, nothing wrong with the financials. If there's nothing wrong with the financials, it's unlikely you're getting any cracks in the armor of the overall market. The XLF was up 8 cents today, 0.2%. It was basically flat above all the moving averages. Guess what? Trend is your friend. Next number above, which they have yet to reach, they had an attempt, but they didn't get there, is in fact 41.40. As long as they stay above 40.80, the door is open. Look where they closed on Friday. Closing print, $40.79. No accidents nor coincidences in the market. Mrs. Market knows about the numbers. Do you? What about Smash Mouth? On Friday, they came into their 20-day moving average, bounced off of it, little bit of a gap and crap situation today. 213.35 is the most recent breakout area. We talked about this a number of times last week. Just under is a gap. Let's call it down around 211.50 or 60. Yeah, breakup candle low just above that line. That area 213, 212 and a half, 213 even, 213.35, 213.55. Anywhere in there is garden variety of chart support, at least from an intraday perspective. Keep in mind, first time, best time, write that down, put it on a sticky note. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.